All right, what is up, YouTube? I'm back once again. I definitely want to make this video about, Lululemon. As you guys know, if you guys didn't know, Lululemon is definitely at $60 now, or probably trading close to that $60 mark. I know it did hit $60 today, but like I kept saying, time and time before, once we hit 54, we go to 60, and let's go ahead and check on Lululemon right now. The first half of the 6 months so far, half of the year, we're up about 5%. We were up about 10%, but we did see that cut down, on various positions because of, the way the market is reacting. So let's definitely check out our Lululemon position. We're up about $377 on it. We see 59.64. So this is now time for us to go ahead and take profits. And what really caught my eye is that CNBC, they reported on somebody taking out, options contracts. Somebody bought it back when it was at the low 50s, and they sold it today, and now they're repositioning themselves for the Lululemon to go back down to 55. Now, typically, what I was saying for you, what I was telling you guys was definitely true the whole time. But if we get some good news, this thing definitely will explode past 60. But for right now, we definitely want to get out, take out profits. As we see, $60 is now closing in on us for Lululemon. So like I told you guys, once we hit 54, we definitely go to 60. And that's typically what you're seeing now. If you guys don't believe, we're about 37 cents away from hitting $60. But I know today, let's check it out. I know today we did get, just a little bit above $60 today, but we do see exactly what's going on here. We see that, the top right here, we definitely have some lines to fill in, about $63. We have about $3 worth of gappage to fill out here. But if you see right there, we might be looking at $1 to $3, honestly, of a gap to fill. But I don't think, we're going to get that gap filled, just yet. We need some, we need some really good news to come out of Lululemon for us to actually go, go ahead and go up. But we do see Lululemon closing in on $60, and that's typically how you make money. Right, we buy things when they're oversold, sell them when they're overbought or getting close to overbought, or maybe reaching our price targets. So we see the oversold position that we did have right here, and typically we just rode that wave up. We see momentum definitely pointing up to the upside, and like I said, guys, it's definitely how you make money in the market. You buy things when they're oversold and sell them when they're overbought, depending on if you're looking for a trade. So we see we're up on Berkshire Hathaway. It's back to 169. AMD is definitely, back to $12. So honestly, we're gonna go ahead and close out on AMD because I really don't. I'm really not seeing any reason to hold this thing any longer. So we're gonna go ahead and take a $200 profit. I know we were up, a lot more. We're up about $2 a share. It hit 14, but we're gonna go ahead and take profits. As you see, we see this thing falling down just about every day. But I'm pretty sure whenever I sell, that's typically when stocks go up. But we definitely might see that thing go back up, but we do see Disney definitely coming out with that dividend. We see Disney has definitely found the bottom. Now we're back to 106. It looks like Disney will definitely climb back up. So we're definitely taking profits here and there. We see Chesapeake. First half of the year is definitely complete, so we're definitely going to take profits. But we see Chesapeake definitely repositioning itself, for that commodity swing on a latter portion of the year. So we see we're down at Disney. We're down at Home Depot. Like I told you guys, Home Depot is definitely due for a pullback. But, once we get that, that check out of there, Home Depot will definitely fly back up. We just need some good news to pump this thing back up. It definitely does move with the market, and it actually does move the market at the same time. So we see Honeywell definitely, definitely coming through at 133. We're still up on that position, about $600 on that, closing, just about getting really close to about $1,000. We see Twilio. We're almost closing in on Twilio of about $2,000 worth of profits. Let's go ahead and check that out. And let's check out Twilio. Like, guys, if you want to own this in your personal account, this is definitely something that you might want to own. But we definitely see that we're closing in on $30. Now, what's going on here? What makes, Twilio pop back up? I'm not really sure right here because we do not have any news on Twilio. So this might be time for me to go ahead and take profits because, like I said, once we go back up to those quarter earnings, the stock is definitely going to build itself back up. So we might be looking at 35 once again, or whatever this top, just about 35 for us to go to 40. Now it looks like Twilio might have a ceiling here at this $30 level or a ceiling at the $35 level. Now, in order for this thing to break out at 35, we definitely have to get some good expectations coming out in earnings and also beat a quarterly profit and show us exactly, if Uber did hurt this company really bad. So we're gonna go ahead and close out our order right here. We're finishing up about $1,600 on the position. So we're gonna close this out. We're definitely making money on all positions. Like I said, when we close these positions out, we want to be making money. So we finished Twilio. Let's definitely check out. Where did we buy Twilio? Where can we look at the trade? Let's see, Twilio. Where exactly did we buy it? Okay, let's see. Fill orders. Okay, so we have Twilio and okay. Not really sure, guys, but I know I did buy Twilio below $25, and that's pretty much what you need. So now we have about $7,000 of money to work around with, just about $8,000. So we are taking premiums. We are finishing up on different positions, but as you see right here, most of our positions are negative, and that's simply because the market did fall. We did have that huge dropping point. I think it was a couple of days ago. But we do see that, we're actually taking those profits. So whatever we bought the first half of the year, when it was, super oversold, we got in on a position. We definitely had to hold it for a couple of months. But now we are definitely taking profits on where the stocks are sitting at now. So only thing you just need is just patience, guys. I mean, you really just have to be patient. And that's typically all you need in the market. You just need to be patient. So that way, you'll be able to profit. So let's see, account summary. No, we don't need that. Trade history. Can we change the trade time though? Let's see. Okay, transaction 6 types. Okay. I'm trying to find it. Jesus Christ. Definitely not hip with the let's see, what do we do on the percentage terms according to Twilio? So wow, okay. I'll definitely get back to you guys on that to see exactly, what did we make on Twilio, but I knew, you see, it was a sizable profit, about $1,700, close enough, to about $2,000 of profit. But for right now, we're definitely looking out for different other stocks. I would say other stocks such as those growth names. If we get a sell-off, that's typically where we want to be. So let's see if we can go back. Let's go to the calendar. We're going to go all the way back to April the 1st, and I'm pretty sure that's where we bought. Okay, let's see. Let's see if we have it. Okay, where's Twilio? Twilio. Okay, show by symbol. More simple. Is it gonna show it? I guess not. But let's see if we can find Twilio here. We see CUDA, that definitely went up. I was holding there for a while. Okay, so right here, about $24.11. This was exactly when insider buyer was definitely coming in. So 24, and then we made a quick trade about 24.35. So we bought it 24.11, sold it 24.35, and that's when the stock fell back down at 23.87. So we took it about 23.87, sold it at about $6, roughly $6 to $7 a share. Making pretty good money. And this took about I would say just about roughly a month, just about roughly a month or two, month and a half, wherever however you want to look at it. But this is definitely how you make money slowly, and you definitely don't have to risk your whole portfolio trying to force some gains here. But because sometimes we did about $5 a day, but you see right here we're cashed out about $129 a day, closing out about $1,700, and that's that's definitely pretty good. And typically what we want to look for on different positions, we definitely want to see what exactly is oversold right now. But I know it might be for trading purposes, just to see what's oversold and just try to get some money going out there. But for right now, we're definitely going to chill out on the trading because, you know, a lot of traders, they're definitely taking time off because of, you know, July the 4th. And that's typically where trading typically gets thin, just like Art Cashin told us, you know, the director of the stock exchange told us that trading will be thin and, you know, not a lot of people will be, you know, trading. So that's all I have for you guys. Yeah, that's all I can think of for right now. But, you know, we're closing out positions. You know, we're still keeping that mentality of closing out positions. You know, we definitely don't want to, you know, keep letting our profits ride. So I know you see me with Berkshire Hathaway. This is going to be a long-term hold. So we're exactly going to see, you know, how far this company can go or how far the stock can go. But typically this stock moves with the S&P 500. So this is just exactly just like buying the S&P 500. Honestly, if you guys want to buy this in your portfolio, you know, go Berkshire Hathaway B class. If you're rich enough, go Berkshire Hathaway A class, which sits at about $200,000. Now, yeah, just pay attention to what the market gives you. We see we're up on Take Two. I still own this in my portfolio. We're up about $500 on that. We're definitely going to see how far this thing can keep running because we do know video game makers, they typically, you know, they move in groups. So we see EA Sports is up today. Let's see Activision Blizzard's with the brand new Call of Duty. That's definitely up today. And we see Take Two definitely up today. So we see three out of three, all video game makers are up. And we see momentum is definitely pointing to the upside. So we might look like we're heading for a run here. EA Sports definitely pointing up, you know, upward momentum. Let's see Activision Blizzard definitely showing us some upward momentum. And that's typically what you need to notice. You need to notice the patterns. You need to notice the groups that run together. So that way you'll know exactly how to profit with different groups. So if you say, okay, man, I missed Ulta. Well, maybe we can get an ELF just in case we missed out on the rally. You know, ELF moves I would say a couple days later, or, you know, it moves slower or things like that. You know, this is just an example. I'm not really sure what the comparison or the, you know, comparison as a percentage return on, you know, Ulta and ELF. You know, we can always check that out using Yahoo Finance's mobile version, you know, of their stock trading app. But, you know, if you guys want to check out, you know, different versions, or I would say different comparisons of how stocks do, I know you can check it on TD Ameritrade's Think and Swim, but I know you can also check it on, you know, Yahoo Finance's app. So we can, you know, we can always check on that, see exactly what's the correlation between ELF and the NASDAQ, what's the correlation between ELF and the Dow Jones, what's the correlation between ELF and the S&P 500. You know, a lot of these things have made stock trading a lot more simple, and you really don't want to be caught making things a lot more complex than what it has to be. So we always need to pay attention to what's going on in the market so that way we can profit the most. So that's all I have for you guys. We see that, you know, we're definitely cashing out. So now we have about $7,800 in cash or available dollars for us to actually, you know, play around with. But nothing's really, you know, jumping out at my eye for us to go ahead and jump into it. But definitely if we see something getting oversold, that's typically where we want to be. We see Nike definitely making a huge run. We definitely see, you know, gaps are trying to be filled here with other gaps. And we see definitely a gap has been filled right here. So it looks like we might go higher. But what brought, you know, Nike up is that, you know, we had a really good quarter. Not only did we have a really good quarter, we see that Nike is going to start moving into Amazon, selling their shoes on Amazon. So it's definitely a win-win situation with both of the retailers. And we see Amazon is down today back at $975. We see 1,000 is definitely the top for the stock so far. We see every time it gets close to 1,000, that's typically when it gets overbought, and that typically lets us know that there's a top at $1,000. And I'm pretty sure it's just a temporary top because this thing will keep going higher. But that's exactly, you know, what you want to pay attention to if you wanted to buy at 1,000. We want to be aware because 1,000 seems like it's a top, so you might want to wait till this thing comes back down. Now we're seeing the technology sector as a whole. This is the technology sector ETF, the XLK. You know, we're able to buy this for about $54.91 a share. I might buy this in the Simulate Trading account so you guys see exactly, you know, how to manage your money, you know, when you're just investing in, you know, a group of technology stocks rather than just investing in one technology stock the whole time. I know it does have perks because you're able to get dividends when you do invest in, you know, individually. But I would say if that company stock goes down 30% and you're just holding the individual stock, you're definitely getting hit for 30%, maybe more. Now, when you hold a group of stocks and one of the stocks in the group of stocks fall 30%, this stock might be down about 1% or maybe less than 1%. So that there's advantages and there are disadvantages. Pros, like I said, pros and cons to holding individual stocks and also holding ETF stocks. So yeah, that's pretty much it. Friday should just be a chill day for you guys. You should be checking out, reading up on what you missed out this week. We see, let's check out Monsanto. Ever since that quarter, we're trying. This is what I'm seeing right here. Monsanto is slowly grinding higher. But as we see, it looks like Monsanto is like kind of forming the top here, and it looks like it's gonna probably round off and come back down. But I'm not really sure. We see momentum pointing up to the upside, but who knows at this point. But we do see that the stock is definitely slowly grinding higher. Looks like it's forming a top on itself. But yeah, that's it. Take care, guys, and make sure you guys are doing your homework. Like I said, homework comes with reading, understanding where discount prices is, because I know you guys might see an oversold chart and you might be like, oh wow, oversold. But no, we want to make sure that we're buying into something that's definitely going to bounce back up on that oversold level. So we might be buying something that has long-term effects on the company. That's exactly why it's oversold, and it doesn't look like the stock price will keep, it doesn't look like the stock price will bounce back up. Now, if it's oversold on temporary news, on say, we would say maybe it's like Anadarko, a plant, they have to shut down a plant because of an explosion nearby. Now, that's just temporary news, and we did see the stock rebound right back up. Now, if it follows through with a bad quarter as well, like APC did show us, that's simply where we will see a slide that will continue to go on. But we do see there's a bounce coming back. We might want to buy into that. We might want to buy some shares here and there, to say, okay, we bought it when it was oversold at 45 and chase it back to 60, because a lot of people are still giving this thing a $60 price target. Because I read it yesterday and I read it a couple of days ago. People are still giving this thing a $60 price target. So I knew I wasn't crazy when I said this thing is going back to 60, but it's definitely taking a long time to get to 60. So we can check out the natural gas sector. Gas is definitely pointing towards the downside of downward momentum, and we see we have broke that $3 handle. And remember, it's definitely a 20-minute delay. So don't get your hopes up when you do see these prices, or if they're discount prices to you. Make sure you don't get your hopes up, because this is a trading delay on the real-time charts. So like I said, do your homework. Make sure you're understanding exactly different patterns in the chart, because you do not want to be caught holding the bag or caught holding anything that you do not want to hold longer than you want. So like if Berkshire Hathaway is definitely a company that you trade, you might want to get out of it now. But if you see this company as a long-term company, you let those profits ride, because remember, we were down over $1,000 on Berkshire Hathaway, but now we see we're up about $1,100, and it looks like it's going to keep climbing. So we want to do our homework. Not only do we want to do our homework, we definitely want to look at the news, pay attention to what's going on, see how it correlates with your company, see how it correlates with the company's stock price, and also check out the competitors, because the competitors can have an effect on stock price. So if Nike was up, Under Armour is probably down because of different news that comes out. So if Nike has a sponsorship for such and such a league, and Under Armour doesn't get it, you're pretty sure that Nike is going to be up and Under Armour is going to be down, because Nike is cheerful. Their shareholders are cheerful, or grateful for having the company, that they are exploring growth, getting the sponsorship, and Under Armour's shareholders are definitely disappointed, which causes them to sell stock and which causes them to lose confidence in the company. And that's typically what happens every time you get a sell-off in a quarter, or a sell-off on bad news. People are looking for how management will definitely react to bad news, or how the company will rebound. And typically, shareholders do vote with their shares. So if you see a company stock down, we see exactly how shareholders, look at that view of the company. Or if we see a share price up, we definitely see exactly how shareholders are looking at that company. But as we see right here, we're definitely making money, left and right. But for right now, we're definitely, taking a hit on a couple of companies. And, for a while, they will be down, but I'm pretty confident that they will pop right back up. I'm not really too concerned about the Starbucks position. We're down back at 58.62. Not really concerned because this is a growth name. And when you find growth names, you hold on to them. You do not sell them because remember, we have to go back to Apple, the Apple chart. You know, I sold Apple at 120. As you see, Apple is definitely at 144, highs of 156. And, you know, we definitely don't want to trade growth names. Honeywell, you know, I had Honeywell for the longest about 105, 107, 10. And as we see, Honeywell is definitely up to 133 a share, 135 a share. So we don't want to trade those growth names. We definitely want to just fill in different. I would say on every sell off, we buy into those growth names rather than try to sit here and trade them all because they will continue to go up and you probably will produce choppy returns and you really don't want that. So take care. I know I said this about 1,000 times, but take care, guys.